Hello and welcome to the second part of the Forex Academy Fundamentals training. Today we will discuss the American economy and its indicators. I suppose you may already know that the American economy used to be the biggest in the world. The European Union, which isn't really a country but a loose economic bloc of countries, surpassed the US in the early years of the millennium. Today, however, the American economy remains the biggest national economy in the world. By far. Number 2, Japan, is more than 3 times as small, whereas Germany takes third place with an economy 4 times as small as the US is. America is the largest importer of goods and the world's third largest exporter. Its economy is based, for the greatest part, on services, while industrial manufacturing still takes up some 20% of the total economy output. America has a highly skilled labor force of over 150 million people, great quantities of natural resources, but it is also the largest consumer, not just of resources. Actually, its Achilles heel is the fact that it controls 2% of the world's oil reserves, while consuming 25% of the world's oil output. This, among increasing scarce, that the world's supply of cheap oil may be depleting faster than expected, and among increasing competition for oil from developing nations such as China and India. Moreover, much of the oil is held by regimes that are not always very sensitive to American interests. America used to be the world's prime example of capitalist accomplishment, combining freedom of private enterprise with small government and high labor mobility. In recent years, this seems to be shifting, although not from an ideological perspective, but forced by the policies of a ruinous administration that appears to prove the point that freedom might be a 4-letter word if it is pushed too far. A number of unpopular and very expensive wars, and an attempted reparation of the broken down financial system have sent the national debt soaring to 73% of GDP in October 2008. Also, many of America's entitlement systems are outdated and are about to become very expensive. The American economy is said to be in recession since December 2007. Over 12% of its population is living below the poverty line. 50% of all America's gross domestic product is earned by just 2% of the population. All that, however, is not the end to the country's woes. Just as its government is spending more than it receives, American consumers too are in debt. Where most of the goods are imported from China, around 17% of total imports in 2008 came from China, so too many of the country's dollars are kept by Chinese investors, propping up the strength of the American currency and toning down the strength of the Chinese yuan, thereby keeping the Chinese exports commercially interesting. In short, while its economy is the strongest and definitely the most agile and innovative by far, in the long term, America's economic clout might be waning. For now, its currency still is the reserve currency of the world. Commodities, such as oil and gold, are valued in dollars. Investors and speculators flock to the American dollar whenever unforeseen events happen. While there is seasonal talk of changing the world's reserve currency to the euro, no one knows if and when this momentous event might ever happen. Now, let's look at the important indicators. Gross domestic product is obviously a very important one. Although it doesn't hold much surprise, as many other indicators already point to a changing GDP, the actual number is usually pretty much what was expected. The most important events are interest rates and their accompanying statements, trade balance figures, inflation and unemployment numbers. We'll briefly delve into each one. Interest rate. Every American state has a central bank, and these are united in the Fed. The chairman of the Fed, currently Mr. Bernanke, controls monetary policy, the most important task of any central bank. The most important way in which he can influence inflation is by tweaking the interest rates, or the price of money. Increasing the interest rate can be both a sign that the economy is doing very well, thank you very much, or it may signal that the central bank is fearful of inflation and thus needs to choke the flow of money. Conversely, decreasing the interest rate might be a sign that inflationary tendencies are under control and investments are actually wanted. Or it may mean that the money markets are very suspicious and the government is running out of options to keep the money flowing. A lot, therefore, depends on the motivation of the Fed's chairman in his interest rate statement and how this is interpreted by the market. You need to sort of watch and learn on this because it's really sort of a Fingerspitzengefühl. Trade balance figures show the balance of imports and exports. Usually more exports than imports means a stronger currency, and more imports than exports point to a weaker currency. That's very logical, because if foreigners aren't interested in your products, they have no need for your currency either. Again, look for a change in this relationship against last year, and also take into account what the market expectation is. That goes for all these numbers. Inflation numbers, CPI, show how much prices have risen since the last time the indicator was released. They typically measure how much a selected basket of goods costs in a few selected areas. Well, this, of course, measures the true value of the dollar, and it should, in a healthy economy, be offset by a bigger increase in wages, return on investments, and interest rates. Another indicator, the purchasing power parity, or PPP, gives a discounted view of inflation. Non-farm payrolls show the unemployment in the major economic sectors, manufacturing and services. It is a major indicator of the health of the economy, and an unexpected increase of this figure tends to create a lot of unrest and makes a currency prone to drop across the board. Now, I realize this section has been lengthy. I hope you were able to keep from yawning too much, and I hope to see you again for the third part of this series. And that's about the Eurozone. For more information about the American economy and a comprehensive breakdown of all the relevant economic indicators, as well as a handy calendar, an event calendar, please visit forexacademy101.com.